Hello guys, welcome back to Investbook channel again and thank you for 100 subscribers. मतलब अच्छा लगता है ना कि यार when you are sharing your ideas, thoughts with others, and in that process if you are building a community, it feels good. So thank you. And as we discussed earlier, we are planning a series of videos where we can learn technical analysis. In that series, this is the second video. First video we discussed about the inside candle. In this video we'll discuss about the head and shoulder pattern. So let's discuss that one. So this head and shoulder pattern is basically a trend reversal pattern. So in earlier video we discussed about the inside candle that usually happens in an intraday basis, but this head and shoulder pattern usually forms in a positional base. Over the period of time you will see a head and shoulder, so it's a positional basis pattern. So a trend reversal, before going ahead, let me tell you an analogy of this head and shoulder pattern. So if the stock is in an uptrend, completely uptrend, going up and up, so you will see a left shoulder and a head and a right shoulder, and you will see a neck. So this is a basic analogy in a head and shoulder pattern. See, whenever you see this pattern, just be ready. Maybe this stock will go in a opposite trend. Like if it is going as an uptrend, maybe after this head and shoulder pattern, as soon as it breaks the neck of this head and shoulder pattern, maybe it will go in a downtrend. So that's basic logic about this head and shoulder pattern. So this is a left shoulder, this is a head, this is a right shoulder. If you see this pattern, be ready to take a trade. So whenever I see this head and shoulder pattern in a trending stock, I'll take the trade based on two conditions. One is accumulation, case 1 accumulation before breakdown, case 2 direct breakdown and retest. So let's first discuss the accumulation before breakdown case. So if a stock is completely an uptrend going up over the period of weeks, months or years, doesn't matter. If you see a head and shoulder pattern and the stock started accumulating just before breaking down of this neckline, be ready to take the trade. This accumulation confirms that this is going to a sure shot profitable trade. So I want to highlight a few things. A lot of people are committing mistakes of selecting a wrong stop loss. So let me tell you the proper working stop loss and working target. If you see an accumulation, in case 1, if you see a stock went to an accumulation before breaking this neckline, select that accumulation phase high as a stop loss, and length of this head, from this head to neckline, take that length and project it to downside and take that as a target. But people usually taking a wrong stop loss. They are taking a stop loss of this right shoulder, sometimes they are taking a stop loss of this head. So this is not an intraday. Sometimes this length of this right shoulder, sometimes this length of head goes around 20%. Who takes the 20% or 10% as a stop loss? So never do that. Just take this high point. This hardly goes 1% or 2%. So take this as a stop loss, and target is wherever that neck breaks down. Take that as a, maybe you'll take this one also, this one, and project it to downside. That is a target. This is a accumulation before breakdown case. Now let's discuss the second one. Like in second case, this won't give us a chance to enter the trade. Here the trade is completely in our hand. It is went into an accumulation and we are ready. Whenever it breaks that neck, we'll take the trade. But here in this case, you won't get that chance. Like the stock is in uptrend. You saw a head and shoulder and left shoulder, head, right shoulder, but that stock didn't go into a accumulation phase. It directly went into a breakdown. Just that's it, and we didn't get any benefit out of it. So now what should we do? Just wait. The stock directly doesn't go to your target. Just wait for some time. The stock gives you a pullback. If a stock comes for a pullback, be ready to take the trade again here, be ready to short the trade. So if the stock comes here and it went to a retest of this neckline, our stock will begin here. Just above that 1% or 2%, maybe 1% of stop loss also works, but again the same, don't take the right shoulder length as a stop loss, or length of the head as a stop loss. This is a stop loss, and when we didn't enter here, you can enter here. So the target is same again here. Take the length of this head and project it to downside, or you can draw like this, where the stock started breaking the neckline. You will take this length and project it to downside. You will get the target. You will get the target here. And the stop loss again, when it comes for a retest after hitting the neckline, just take 1% above this as a stop loss, and that will be a done. So this is a basic pictorial presentation of head and shoulder pattern, and these are the two cases where I personally take trades based on the head and shoulder pattern. Now you can't see this much clean in a live market. You need to be a little smart to catch this head and shoulder pattern. Now let's see the market charts, how they look and how we can find the head and shoulder pattern. So these are basic charts we see in a market. You can't see a clear shoulder. You need to a little smart on this. This is a left shoulder, this is a head, this is a right shoulder. Whenever that the stock started breaking this neckline, our trade will begin here. See, this is a first case. The stock started accumulating before breaking the neckline. So our stop loss will be here, and the target is length of this head and project it down to downside. You will get the target, you will book the profit here. This is a first case, and this is a second case. This is a left shoulder, head and right shoulder, and the stock started breaking down, and you didn't see any accumulation here when the stock really breaking down the neckline. So just wait for one day. If you see any pullback, look at this second day candle. This exactly touched the neckline of this stock. I mean this neckline. This indicates that buy log, the trade is ready. You can take the trade here. This is a final confirmation. You can take the trade, and the stock is going to a downside for sure. So our trade will really begin here, not when it got breakdown. So take the stop loss 1% or 1.5 or 2% above this and sit on the trade. You'll get the profit and you'll book the profit here. And again same, the trendy stock, you see a left shoulder and head and right shoulder. You take the profit and length of this head and project it to downside. You take the profit here, anywhere. Before hitting a stop loss, you'll get the profit. So will this head and shoulder really indicate that the trend reversal? Maybe, we don't know, but you get the target. After that, if it goes downside, it's okay. Sometimes usually stocks bounce back. So that's not a really a trend reversal, but this head and shoulder pattern gives our target. That's what really matters, and you take the profit and close the trade. So in a live market, if you see this, I draw personally, this is a Wipro chart. So see that I drew it personally. This is a left shoulder, this is a head, and this is a right shoulder. See, the stock, when it started breaking the neckline, it gave 3 days of time for accumulation, and our trade will begin here, and my stop loss would be here only, not here. That would be around 15%. Who takes the stop loss of 15%? Don't do that. So our trade began here. Stop loss, let's check how much is stop loss here. Price range, if I take this as a 1.45, it's okay, fine. 1.45 stop loss is fine. And the target, just look at this, 13.5%. 13.5%. If you are ready to take the 13.5% as a profit, you are good to go. 1.8 as a stop loss. Just protect it downside. See, you got the target, and Wipro trade closed in a profitable range. So after that, it doesn't matter if if the stock bounce back and go up or down. So you'll close the trade here. That's all about the head and shoulder pattern. So exact opposite of this pattern is inverse head and shoulder. Head and shoulder forms in a uptrend market, and inverse head and shoulder forms in a downtrend. So that's also in a part of technical analysis series. But if you want me to make that video as soon as possible, please let me know in the comments. And I hope you like this video. If you like this video, please like, subscribe and share. That will motivate us to make more and more videos, and we'll come up with more knowledgeable videos in the future. Thank you. Bye bye.